Hello everyone, welcome back to the channel. Today we are going to talk about banking tips for cross-border workers, especially Malaysians who work in Singapore but spend, save, and invest in Malaysia. This is one topic that looks simple on the surface, but if you get it wrong, you can quietly lose thousands of ringgit every year through bad exchange rates, unnecessary bank fees, and poor cash flow planning. This video is not about fancy banking tricks. It is about practical, real-life decisions that protect your hard-earned Singapore dollars and help you convert them into ringgit more efficiently. Let us start with the most basic mistake many cross-border workers make, which is relying on only one bank account. Many people receive their salary in a Singapore bank account and then manually transfer money back to Malaysia whenever they feel like it. This often leads to poor timing, emotional decisions, and bad exchange rates. A better approach is to have at least one main Singapore salary account, one secondary Singapore account for spending, and one main Malaysian account for long-term savings and commitments. When you separate accounts by purpose, your money flow becomes clearer and more disciplined. Now let us talk about choosing the right Singapore bank account. Not all accounts are suitable for cross-border workers. Some accounts charge fall below fees if your balance drops below a certain amount, for example SGD 2000 or SGD 3000. Others may have higher remittance charges. The best type of account for cross-border workers is one with low minimum balance, free fast transfers within Singapore, and easier international transfer options. Your goal is not prestige. Your goal is flexibility and low cost. Next, we need to talk seriously about currency exchange, because this is where most people lose money without realizing it. Many workers simply use bank telegraphic transfer or over-the-counter remittance because it feels safe. The problem is that bank exchange rates are usually worse than market rates, and the fees are often hidden inside the rate. Over a year, even a difference of 1 or 2 sen per Singapore dollar can translate into RM2,000 to RM5,000 lost, depending on how much you transfer. A smarter approach is to separate banking from currency exchange. Use your bank account to receive salary and hold funds, but use competitive digital remittance platforms or multi-currency wallets to convert and send money to Malaysia. These platforms usually offer rates closer to market rates and lower transparent fees. The key lesson here is simple. Convenience is expensive. Efficiency saves money. Timing your transfers is another important banking habit. Many people ask whether they should wait for the best exchange rate before converting. The truth is, trying to time the market perfectly usually leads to stress and inaction. A more practical strategy is to transfer money on a fixed schedule, for example once or twice a month, regardless of small fluctuations. This approach smooths out exchange rate risk and builds a disciplined system. If the rate improves, that is a bonus. If it drops slightly, you are still consistent. Now let us discuss Malaysian bank accounts. Many cross-border workers keep using the same savings account they opened years ago without reviewing it. Some accounts pay very low interest, while others may have better features like online fixed deposits, instant transfers, or higher daily transfer limits. Your Malaysian account should be optimized for receiving funds, paying commitments like insurance and loans, and storing emergency savings. You should also ensure your online banking security is strong, with updated phone numbers, email addresses, and two-factor authentication. Another important banking tip is to separate daily spending money from long-term savings. When all your ringgit sit in one account, it becomes too easy to overspend without noticing. A good habit is to move your converted ringgit into different accounts. One account for monthly expenses, one account for emergency funds, and one account for long-term investments or fixed deposits. This mental and physical separation helps you respect your savings and avoid accidental leakage. Credit cards are another area where cross-border workers need to be careful. Some people apply for Singapore credit cards and then use them heavily, thinking they are earning rewards. The problem comes when the bills are due and you have to convert ringgit back to Singapore dollars at a bad rate to pay the balance. If you use Singapore credit cards, make sure your salary and spending currency match. Alternatively, Use Malaysian credit cards for Malaysian expenses and Singapore cards only for Singapore spending. Currency mismatch is a silent wealth killer. Let us also talk about emergency planning. As a cross-border worker, your risks are different. You may face job changes, permit issues, or sudden medical needs. Your emergency fund should ideally be split between Singapore dollars and ringgit. Keeping everything in one currency exposes you to exchange risk during emergencies. A balanced approach gives you flexibility and peace of mind. Another often ignored topic is nominee and access planning. If something happens to you, will your family know which bank accounts you have in Singapore and Malaysia? Do they have access or at least information? While this is uncomfortable to think about, it is a responsible step. Keep a simple record of accounts, not passwords, but account names and banks, and let a trusted person know where to find it. Finally, let us talk about mindset. Banking is not just about accounts and apps. It is about behavior. Cross-border workers who do well financially treat banking as a system, not as random actions. They automate transfers, minimize fees, review accounts yearly, and adjust as their income grows. Those who struggle financially often blame exchange rates or banks, but in reality, the problem is lack of structure. To wrap up, working across borders gives you a powerful income advantage, but only if you manage your banking wisely. Small improvements in account choice, transfer methods, and money flow can easily save you several thousand ringgit a year. That money can go towards your emergency fund, your investments, or your future freedom. If you found this video useful, please like and subscribe to the channel. Share this with someone who works across the border and is still losing money quietly through bad banking habits. Thank you for watching, and I will see you in the next video.